All right. It was asked of me if I would go over a gold and silver versus the market. And when I say the market, it's the S&P 500. And someone asked if I would spend some time in regards to my thoughts on gold. I threw and silver in there because they've been linked for the last 50 years. I felt it would be important to start with going over the misnomers of gold and silver. It's just looking at them as what they really are. There are several misnomers surrounding gold investment, from misconceptions about its nature as a productive asset to its role in a portfolio. These myths are often perpetuated by fear-based marketing tactics from some gold dealers. So we're not putting everyone into the boat, but short and simple, gold has been the expectation store of value if the dollar goes kaput, or if we lose our reserve currency status. You know, if our government puts us into a worthless position by the value of the ratings on the US treasuries, gold has always been the bailout. And the first comment is that gold is a productive investment. And I really want you to listen to this because I think it's very important to understand gold. Unlike stocks, bonds, or real estate, gold does not generate any income, pay dividends, or produce profits. Its value does not grow inherently. A share of stock represents a portion of a company, which can produce profits over time. An ounce of gold remains just 1 ounce of gold, no matter how long you hold it. So it's just something to understand. It is an investment, but you might not call it a productive investment. It's an ounce of gold. It's an ounce of silver. That's what it is. It's a metal. I've given you guys some silver. In fact, it's kind of funny because somebody that started with me 10 years ago, you might have, what, 20 pieces of silver now? Not a bad investment when it's up at $34 a piece. But we've had a spike. It's just a spike. If it came down to trading silver for food, silver for heat, silver for energy, the silver is going to lose every single time. Gold is a hedge against inflation. I honestly thought and believed gold is a touted inflation hedge. In all honesty, though, its track record for this is very inconsistent. Gold prices can rise significantly during periods of high inflation, preserving some purchasing power. However, during the period of decades of high inflation, gold prices decline due to the strengthening of the US dollar. It creates a contrary expectation when it comes to inflation. I'm going to show you a chart, and it's shocking because we had really high inflation in numbers through the 70s. It really didn't move. And just a thought for you is sometimes gold does act as an inflation hedge. Sometimes it doesn't. Something to remember here. And yes, there's been a lost decade. It's actually about 12 and a half years where the S&P 500 went sideways from point to point. From 1980, it took 27 years for gold to regain its peak price, a period during which inflation reduced its purchasing power, and it reduced it by roughly 23%. So just because it hit the same price, you could buy 23% less with an ounce of gold to 2007. That same ounce you bought in 1980 bought you 23% less items per ounce of gold in 2007. Gold is a safe investment. Again, it's volatile as all get out. And you don't have the option mostly in gold to hedge it with puts. To hedge it, you usually are using oil. The movement higher on gold is due to the belief that it is a store of value. As soon as people see the market going, a lot of people move out of gold back into the S&P 500 because they're better returns. I'm going to show you that as well. All right. Gold only increases in value during times of fear. 100%. It really moves in times of fear. It's a belief system that, hey, gold is going to hold its value as our economy falls or as our GDP falls, as the value of the dollar falls. Yes, actually, gold is supposed to get higher in value, but you've got to take your profits on it. I love this one. Gold mining stocks are better than physical gold. When you buy physical gold, it typically needs to be stored somewhere. And that break even means gold has to move over about 9.5%. In real life, mining stocks are usually more volatile and risky, and their value depends on the company performance, not so much on the price of the gold. There is a greater potential reward if a mining company performs well and hits a new vein of gold during a period of time, but gold stocks are a speculative investment. Gold is difficult to buy, sell, or store. Well, yes and no. ETFs allow you to invest in gold without the logistical hassles or security risk of storing it, but you better believe in the ETF is built in their storage cost of gold. Physical storage, many dealers offer vault storage for bullion, and ETFs that track precious gold hold the metal on or in your behalf. And the neat thing is gold's a highly liquid market. It's very easy to lose 10% on gold over nothing overnight before you have a chance to get in and sell any of it. Gold jewelry is a great investment. It really isn't. Gold jewelry is one of the poor investments you can be in. A better investment due to scarcity. If you're going to hold gold, gold coins can up the value of the 1 ounce gold that it could be, like a $20 gold Indian. Those have some scarcity value that will increase the price above the spot price of gold per ounce. I love number 8. Gold or silver is going to be the replacement for the dollar. As soon as we went off the gold standard, technically in 1971, gold or silver can never be that currency again. We went off the backing of gold. We don't have enough of it to use it as a currency. So please don't think gold or silver will replace the dollar. Even if the dollar goes to zero, the United States goes bankrupt, we're going to reprint and create a new currency. Go look at Brazil and how many times Brazil has basically filed bankruptcy, especially through the 80s and 90s, and just created a new currency to start over again. Kevin, is going to be $5,000 and silver is going to be $55 in value. Maybe. The short answer there is maybe. But nobody really knows. I have a couple charts here. If you're looking at gold, looks amazing. Great run. In fact, before 2023, you basically had a 400% return in it. Problem is, you also had an 11-year gap here, an 11-year lost amount of value, and an 11-year, well, I guess that's 10-year, a lost decade twice where it just traded sideways. Would it have been a great investment from 2023 to 2025? Definitely. And did it outpace the S&P 500 in the last 2 years? Yes, it did. And it did significantly, right? So the last 2 years, it was a significant beat. Unless you were in Meta or NVIDIA. Micron doubled in the last 8 months. Palantir doubled in the last 18 months. We're only talking about a 71% return in the last 2 years. They call the last 5 years, and it has been 5 years because you have to go back here. But really, in the last 2 years, we can name a couple dozen stocks that did just as well. Did it do as well as the S&P 500? No, the S&P 500 is a laggard in the last 2 years. But we're talking about a 2-year trend, and I'm not sure I can see it going significantly higher. I will definitely let you guys email me your thoughts. If I was looking, and actually here's some gold performance, and I pulled this off last week, so this is probably last Friday. 30 days down 1%, 6 months up 13, 1 year 32, 5 years only 71%. Really could do it 2 years and it's probably 70 of that 71%. In 20 years, it's a 662% return. I just put some S&P 500 information in here so that we could review it. 1 year return, 14.8 versus 32.6. 5-year return, excluding dividends, was 93.8. Significantly beat the 71.05. And then if we go a 20-year, 662. Historical data, as I found it, it was just roughly just over 700% return. So in 20 years, it hasn't beat the S&P 500 either. I put some other information here on the S&P just so you guys can see how it's kind of funny that they talk about annual returns and average returns. It's more important to see a chart though. There's your S&P 500. And yes, we did go through a lost decade. It's about 12 and a half years. You're either starting in 99 and going out to 2010, or if you pick the highs, you can go out about 12 and a half years. So we do have lost decades in the S&P 500, but you don't have 2 lost decades in a row over the last 30 years. The S&P 500 would be a better investment for you. I'm more of a silver fan. And it's interesting because I remember in the 80s, oh, silver's going to go to $50. And in all honesty, you have a better return from 5 up to almost 50. That gave you a better return than gold. Is it back up to that? No. Again, it'll probably be another lost couple of decades, not just a decade, which is scary because you already have a lost decade. with 0 growth. And then you have another one that's about 12 years with 0 growth. Great run up. If you sold and you made 1,000% return, that's awesome. But as you average out the last little bit, because we're going 20 years, not 30 years, gold will beat silver in the last 20 years. Gold does not beat silver in the last 30 years. Just something to be made aware of. I put a couple of links in here that I'm going to give out to you, but the short answer is U.S. money reserve and U.S. mint seem to be the big ones or the biggest ones when they're talking about, hey, we want your gold, we'll put it in IRA, we're going to store it for you. Over 30 years, these guys have serviced 900,000 accounts. But recently, they are down to less than half of that. As you do your research, well, Kevin, we still have 400,000, 18 complaints over the last 3 years, and it comes down to the same 3 things over and over and over again. Once they get your gold, they can't pick up the damn phone. Once they give you a price, the price changes and you're getting your credit card charged over and over and over again. There are hidden costs that were never discussed. As you go through, and these are the guys that seem to be the most popular on the TV, they have hundreds of complaints. But only 18 are willing to put it on the B&B. Again, you guys can read through this. I'm going to go through a little bit slow. But they can't pick up the phone. Their response, the customer sounded perfectly lucid on the phone call. However, we will abide by the family's wishes and refund the money. Once he sends his coins back, we left a message to facilitate the return. So they're just frustrated for no reason. Gold coins, charge a credit card over and over again. Ridiculous response. Storage fees, not paid on the account, and so they sold my gold. It'd be nice if they were told storage fees, right? Father bought 117,000 gold coins, passed away, knows where to keep those. The buyback offer was $94,000. You guys just saw the value of gold. February of 2024 to January 2025, the buyback offer is $94,000, a loss of over $23,000, which doesn't make sense to me because the gold price has been through the roof. I never thought that they wouldn't pay the value of gold if they can get a cheaper offer. U.S. Money Reserve ripped me off by claiming I get my money back when I decide to sell these coins. High pressure selling tactic. It goes through bidding, lower prices. Between 2023 and 2024, I just showed you how the gold price went up significantly. Sold 15 gold coins. The amount offered was a 20% reduction to the monies paid, even though the price of gold has increased 30 to 43% from the purchase price. How do you lose 20% of the value? Guys, I'm just going to make the comment. And I'm going to put the links in here so you guys can go through it. I did put a link in here of the top 5 best gold IRA accounts, who has them. But here's the honest truth. The honest truth is, when it's too good to seem what it is, it's because it's too good to seem what it is. I think a gold IRA is the best way to ruin your retirement. It's the best way, even though yes, you do want to be in coins because there's scarcity value. When you're buying and selling from the same investor, he's there to satisfy himself. It's a rigged system where if you're in it for more than 5 years, you can lose more than 50% of the value, not because of the price, but in storage fees. Hartford's one of the best, but their storage fees are ridiculous. I have not heard of Thor Metals. Gold Coast is supposed to be one of the best. Patriot's one of the best. Party Gold is one of the best. But as I've gone through and I've searched these, they all say the same thing. Even though gold pricing in the last 2 years, if I could just get my computer to work, even though gold pricing has went from roughly 2,000 to 3,500, you can still buy in 2023, have a 43% increase in the value of gold, and lose 20% as they buy back their coins. Not to mention the storage fees of keeping it stored with them over that period of time. It's not a good investment. I promise you, even though I'm sending you out silver coins, if the you-know-what hits the fan and it comes down to a silver coin versus bullets or batteries or something that provides heat, wood, water, medical supplies, the last thing you're going to care about is a gold or silver coin. It's just not what it's all cracked up to be. Would anyone like to ask any questions in regards to gold or silver? But my recommendation, if you're trying to grow your account, you want something that's easily liquid, this is not where I would be. Years ago, I had a small experience with physical gold, and I certainly would recommend you stay far away from it. Thank you very much. That was someone else that just typed it in. Kevin, I also have been in silver and gold on and off. It's been a losing proposition for me since the late 80s. And I don't know if that's from, is that, could you explain a little bit more? Did you just pick bad times to buy or sell? Would you be able to answer that a little bit differently? So there are two of you that are here today that are also saying, hey, gold and silver is not necessarily where you want to be. The companies rip me off. If you don't mind me asking, how many was it? 2 different companies, 1 different company, one company. How many companies have you gone through? 3 of them. I fully agree with you. I've never owned metals or jewelry. So good. Okay. So we seem to be in the same place here. It looks like 2 of you have done this in the past, one with 3 separate companies, which I'm sorry, but that does seem to be the norm. And yes, would gold have been a great investment the last 2 years? It looks like it. But historically, it's not a great investment, and you're not looking to make some good money in it when it comes down to buying and selling. Even if it's been up, they don't have to pay the spot price of gold for you when they buy it back from you. Or those are the commissions or the fees of doing it. I never thought of that. Yeah, someone just typed in, Kevin, are those the commissions or fees? It actually doesn't say in the complaints. There are hundreds of complaints online, not just all in the Better Business Bureau. If you just do complaints, you'll find hundreds of them, which I guess would make sense if you still had about 400,000 accounts open. But short answer, it's typically not a great investment, and I actually don't know if it was commissions or fees or why they would, buy in at 117,000 and sell out at 94. It's ridiculous. It truly is ridiculous. All right, guys. Hey, I appreciate being here with me today. I appreciate being with me here tonight. I hope this was helpful for you guys. I hope this was a way to take a look at investment so you can see something a little bit different. Have a wonderful day. Appreciate you guys being here.